Hello, everyone. Welcome to VRIC Media, your most trusted voice in metals and mining. I'm your host, Darrell Thomas, and today we have the pleasure of interviewing Andy Schectman of Miles Franklin Precious Metals. But before we get into that interview, I want to let you know about the New Orleans Investment Conference that is coming up from November 2nd through November 5th. I will be there live in person, so if you are able to attend in person, we'd love to meet you and love to connect. However, there is a virtual option as well where you can get access to this exclusive information from many of the well-known speakers in this independent financial space, such as George Gammon, Rick Rule, Peter Schiff, Brian Lundeen, Danielle DiMartino Booth, just to name a few. So be sure to click the link that is pinned in the comments below, as well as the description, so that you can get access to this amazing event. And hopefully I'll see you there. Andy, my man, glad to have you back on the show.
It is always good to be here with you, brother. Always good to be here with you, Darrell. Thanks for having me, man.
Yes. So recently we had the gold price take a cool off. It kind of cooled off a little bit. And I was wondering if Andy was telling folks to buy the dip, and so currently the gold price is measured in dollars has rebounded, not fully to the level from the blow off top last week, but it shows that this bull market is strong. And I want to get your perspective on, what do you think is happening here? Is there anything that we may not be aware of, or the general audience may not be aware of, because it's nothing stopping this train, it seems like?
Well, Darrell, I've been talking about gold being reintegrated into the monetary system now for a while. And this whole gold linear progression of events I saw things starting to change in 2019 with the formation of BRICS. And I've talked on your show and with Jay forever about BRICS. So we're going to put that on the side burner for a moment right now, because what is very unusual, at least very different than what I've seen in all of the years that I've been trying to analyze this situation, most of it focused on the global south and the accumulation of metal by the BRICS nations, not just metal, all commodities, and the expansion of the Belt Road Initiative and all of the partners that are involved in that system are all very resource rich, many underdeveloped, but resource rich. And you could sense that we are moving into a world where resources matter. It's kind of like that video game on your phone where you start with like a hammer and way back when you start with like a hammer and a match, and then you build your empire through the acquisition of commodities. Well, that's changing, but that hadn't hit the United States until what I believe was November, when Trump won the election. And things have begun to massively change in regards to the way the most sophisticated traders on Wall Street look at precious metals. It's one thing for the central banks to buy it, which to me is as bullish as it gets, right? When you see the central banks loading up on gold, and even more so, Darrell, taking possession, pulling the metal off of the LBMA, pulling the metal off the COMEX, taking it back from the New York Fed, removing counterparty risk. And gold and silver are two of the only assets in the world that are assets that are simultaneously no one else's liability. That's big. But when you see the most sophisticated, well-informed, and wealthy traders on the planet, that being the big commercial banks in the U.S., stand for delivery and take possession and change their tune, something is different, very different. Let me give you an example. I'll give you 4 or 5 examples. We'll start with Goldman Sachs. Goldman Sachs came out and said, in fact, they just revised, I just wrote this down here today, they just revised their numbers, which isn't part of what I wanted to tell you, but they just revised, Goldman Sachs did, their numbers. Give me 1 second here, I will find it. On Monday, Bank of America raised its forecast for silver to 65 by the end of next year, and gold to 5,000 by this year. But we're going to talk about Bank of America too. Goldman Sachs, they came out and said if the market even senses for a moment that the Federal Reserve has lost its independence, you'll see gold at 5,000 like that. Well, you look at Stephen Mirren. Stephen Mirren is the architect of the Mar-a-Lago Accord. Stephen Mirren was Trump's advisor, still is, and he filled the vacated spot at the Fed. What independence? There is no independence. You look at Bo Hines, I think is his last name. He was Trump's crypto czar. He is now running USA Tether. The whole system is lacking independence. So Goldman Sachs is more or less telling you $5,000 announced gold. I mentioned Bank of America. You look at their high buck analysts, a guy that sends out letter, and these people I'm mentioning, they're talking not to the plebes, they're talking to the institutional traders, because Michael Hartnett's letter, I don't know how many tens of thousands of dollars it is a year, but he's a smart dude, a very smart dude, and he just came out and he said, well, let's go back 1 second, because before that you had Morgan Stanley, and their chief investment advisor, CIO, says, no more 60-40, 60 stock, 40 bond. Let's go 60-20-20. Sell 20% of your bonds and buy gold. So they're saying 60% stock, 20% gold, 20% bonds. Never happened before, right? Most financial advisors would say, fine, 5%. They acquiesce. Now they're saying 20% and cut half your bond holdings. Back to Michael Hartnett, the big buck analyst who speaks to the high institutional level traders and clients. No, not 60-20-20. He says 25-25-25-25. 25 stock, 25 bond, 25 short-term treasury paper, 25% gold. Really interesting. Never heard that before. How about Jeffries? Now, Jeffries means a lot to me. About 20 years ago, Prudential Beige nominated Miles Franklin to be an authorized reseller for the U.S. Mint. At the time, there were only 27. They don't really talk about it too much anymore. It's even hard to find. You got to call the Mint and ask them. But we're one of 27 to my last count. I don't know how many more have been nominated. They can do one per year, the primary distributors. One of 27 authorized resellers. So that was Prudential Beige. But Jeffries bought Beige. And for several years, Jeffries was a primary distributor for all of the world's mints. They understand gold very well. They subsequently closed their gold division. They're not a primary distributor anymore, but their head trader just came out and said their next stop is 6,600 on gold. But maybe the biggest one of them all is Jeffrey Gundlach, the bond king, the man who made his mark on selling bonds, right? The antithesis of gold, and a safe haven asset, but pays a yield, right? He says 25% of your assets in gold is not undervalued or is not overvalued, excuse me. So you have the most sophisticated traders on Wall Street. You have the most high paid buck analysts, including chief investment officers, all whistling a very different tune as it pertains to how much gold should be in people's inventories and in their holdings. And the people they are speaking to are the big money, big buck people who position well before the crowd does. So this noise that we saw on Friday, this pullback that everyone freaked the hell out about after the price of gold and silver had been going up nonstop, the market needs to exhale too. The big traders do take profits. But look, here we are right now, pretty damn close to where we were when the market got whacked on Friday, with gold up $60 right now to 43.12 and silver up to 52, almost 52 and a quarter. So yeah, it's buying the dip is the way to get ahead. But even more appropriately, if you don't understand, none of us do really, where things are going, I see a primary trend going much higher for a myriad of reasons that I could talk to you about. But if you're not sure, then cost average. Let purchasing over time smooth out the uncertainty. And that is the only way to do so, because really none of us know what the hell's going to happen tomorrow. I think you just have to sometimes trust your gut. And if you're uncertain and feel a little queasy about making a large purchase at a certain time, even after it falls, which is buying, catching the falling knife is hard, cost average your position. And over time, that will smooth out the uncertainty.
Gotcha. Yeah, appreciate that. I do want to dive into your outlook and some of the other information you have, because you mentioned this could go much higher. Before we get there, I do want to cover the debasement trade. This has been a huge headline on multiple different institutions regarding folks flocking to hard assets because that the U.S. dollar is going to be debased or devalued even more, especially once the money purchase come back on and such. And so I want to get your perspective there, because there has been some disagreement with that with that being inflationary or whatnot, because the bond yields haven't moved up. And so I just want to get your perspective there.
I don't know if I don't remember what the topic of our last conversation was, you and I, but I bet it's what I'm going to tell you, because what I have been talking about, and one of the few who's out there either stupid enough or maybe I'm onto something, I don't know. I felt the same way with BRICS in 2019 when I was the only one saying it, and 2020 when I was the only one saying it at Jay's conference, and everyone thought I was nuts. And then all of a sudden, here it is. I see something very clearly, and either I'm stupid to say it, or maybe I'm just courageous enough to say it. And I've been saying that that's exactly what they're going to do. But I have a kind of a roadmap on how they're going to do it. I've been saying that's exactly what they're going to do now for the better part of 6 months in almost every interview that I've given. And I couldn't agree with that assessment more. Let's kind of break it down a little bit. So, okay, it is a debasement trade. Let's start with Vice President Vance. Vice President Vance came out and cited Triffin's dilemma on White House letterhead, I don't know how many months ago, and where he said, look, you know, Triffin's dilemma, by the way, for any of your listeners who aren't polished up on it, it's fairly simple to understand. It says that if you are the world reserve currency, this is an economic theory that I don't know how far back it goes, but if you are the world reserve currency, you will always run a trade imbalance. And the easiest way to explain it would be that the world, who needs dollars to buy everything from oil to just about any other commodity and to use as collateral for trades and whatnot and loans, they need dollars. And we cannot provide the world enough dollars just simply through trading with them alone. So they continually need to sell their currency in the open market, which pushes it down to buy our currency, which in theory would raise it up. And so over time, what happens is their currencies depreciate against ours, making manufacturing in those countries so much more affordable, makes the goods that we buy, a massive subsidy to the consumer, way cheaper. The world reserve currency has given us very, very low price goods at Walmart and Target and whatnot, but it's hollowed out our manufacturing. And so he says, look, Vice President Vance does on White House letterhead, look, this is no longer a good deal for the United States. It is a boon for the consumer. It is a massive drag and hindrance on the producer. And in essence, we've lost all of our manufacturing. Okay. So that's the beginning of it. You look at Stephen Mirren, the architect of the Mar-a-Lago Accord, who is now at the Federal Reserve, who was Trump's advisor. His whole thesis is to devalue the dollar, in essence, to reshore manufacturing. Well, how do you reshore manufacturing? My theory, and I've been saying this publicly, debasement or what, is that they are going to default on the world reserve standard. They're not going to default on the system, but they do not want to be the world reserve currency anymore. Even President Trump said, yeah, you know, a strong dollar is great, but it's bad for manufacturing. No one wants to buy our stuff or come and do tourism here if the dollar is really strong. And so they're giving you little crumbs, little hints. So we look at all of the gold that's come into this country since November, billions and billions and billions and billions and billions and billions and billions every single week and month into COMEX. And no one can tell you who the hell's buying it. Who's got that kind of bread? A lot of it is stuck in the COMEX. They're leaving it in the COMEX system because at this point, that money still trusts it. And a lot of it's leaving the COMEX. Where's it going? Who's buying it? Is it the Western banks covering their short positions? Maybe. Is that gold then going to the Treasury Department under the guise of the Exchange Stabilization Fund that the Secretary of the Treasury runs, who just happens to be a self-proclaimed gold bug, who said he wants to preside over a new monetary system, a new Bretton Woods, who said that he wants to remonetize the asset side of the U.S. government balance sheet. Well, what the hell does the U.S. government balance sheet consist of? The largest asset is student debt. The second largest asset is military. They ain't getting remonetized. You could remonetize asset number 3, I guess, which is national parks and land, but why not revalue gold, which is at 42.22 on the balance sheet? Of course, it hasn't been audited since 53, but this is a gold bug who understands gold, who speaks of a new monetary system. And I would argue with the passage of the Genius Act, there is a new monetary system. So I'm still with you here. So how does this all happen? All right, so we import all of this gold. 6 months ago, I gave an interview with Judy Shelton. And Judy just gave an interview with Michelle McCory, who also runs my YouTube channel. And she said the same thing on my show. and on Michelle's. And in essence, she just did an interview with Adam Taggart, said the same thing. Now she was the primary or Trump's nominee to run the Fed in 2016. And although it wasn't confirmed, she said to me in no uncertain terms on my YouTube channel, Andy, July 4th, 2026 is a very, very big day for President Trump. It is the 250th anniversary of the United States, and he is going to reconnect gold to the treasury market, to the back end of the bond market, the long end. And in her book, As Good as Gold, she says 50-year treasuries will be the long one with a tiny, tiny bit of interest, 0.5%, 1%, something like that, redeemable in gold. She goes on to say 5, 10, 20, 30, and 50-year treasuries in her book. All right, so follow me here. You have a Secretary of Treasury who wants to preside over a new system. You have Stephen Mirren, who's at the Fed now as the advisor. The Mar-a-Lago Accord, devalue the dollar, bring back manufacturing. You have Trump talking about bringing back manufacturing, starting with tariffs. We've got to bring back manufacturing. And you know what, Darrell? If we don't, our kids are dead, and their kids are even more dead. We don't make anything anymore. AI is going to kneecap jobs. 60% of America has no college education. No one's got savings. We need to bring back manufacturing, period. Okay, how do you do it? The strong dollar and Triffin's dilemma says you can't do it. No one will buy our stuff. The dollar's too strong. The cost of employment, everything, labor. We don't have any manufacturing anymore. We've sent it all offshore. How are you going to reshore everything? All right, I got you. So if Judy is right, first and foremost, and they do peg gold to the back end of the treasury market, first, you have to let it go much higher. Now, what has gold been doing? Stair-stepping, 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 outpacing everything, and no one notices it. And people look at Bitcoin and they look at NVIDIA. They don't notice gold, that it's outpaced everything. They don't notice that it was up 40% last year, over 50% this year. That's not sexy enough unless it's triple-digit gains or something like that, but they don't notice it. Now, I believe that they are going to let it go much, 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 much higher and then revalue it. Revalue it, even if they just market to market at that point. Right now, it's valued at $42.22 an ounce. James Rickards is publicly saying $24,000 an ounce. Mike Maloney, $10,000 an ounce. It's as simple as them revaluing gold, telling the president tells the Treasury Secretary to revalue gold, who tells the Federal Reserve. They're issued gold certificates. The Treasury issues the Fed gold certificates, who then every $4,000 increase in the price of gold, the Treasury general account will get $1 trillion free and clear. So if they moved it to 24,000, hypothetically, not only would it benefit every central bank on the planet who's been buying it, but in essence, it would allow the Federal Reserve to receive those gold certificates, for which, in theory, at least it says so in all the documentation, that they hold the gold, but it's not theirs. They're entitled to the fiat value of the gold. The gold belongs to the American people. They push a button, create $6 trillion, and give it to the Treasury, which devalues the dollar massively. Devalues the dollar massively. The higher the price of gold goes, it's not even the gold price. It's the devaluation of the dollar. That's what they want. The debasement. They're debasing the value of the dollar by letting gold and Bitcoin go higher and higher and higher and higher.
Timing is everything in this business. We've seen commodity prices really move up. The copper price, that started to move up strongly. We're not far off all-time highs, although you wouldn't know it from the junior sector and copper companies in general. But I think over the next year or two, we're going to see that really correct to the upside, and you're going to see a lot of money come into the sectors. Vizsla Copper, we're the team that brought you successes including ISO Energy and Vizsla Silver. If you want to learn more, you can find us at vizslacopper.com.
All right, so whether or not they do that, which I do believe they will, even if they just market to market, it's devaluing the dollar. That's what Roosevelt did in 33. Right there, he confiscated gold at $20 an ounce and devalued the dollar by 40%, making gold $35 an ounce. This would fit hand in hand with what? Triffin's dilemma. The dollar's too strong. Let's devalue the dollar. Let's let all of the world trade in local currencies. Look at what the BRICS are doing. Trading in local currencies over Enbridge, settling imbalances in gold. Gold is not replacing the dollar. It is replacing what stands behind the dollar, the treasury market or trust. All of these nations want to trade over a bridge network with their own local currencies, settle imbalances in gold. Look at the Shanghai Gold Exchange. They're building multi-jurisdictional vaults all around the Belt Road Initiative. They just finished one in Hong Kong. They're building one in Saudi Arabia right now. Saudi Arabia, who was a full participant in mBridge, the technology that allows banks to trade cross-border free from SWIFT intervention. And then they're going to go all throughout the Belt Road, settling imbalances in gold, not in one jurisdiction, kind of like Venezuela asking the Bank of England, can we have our gold back? No. So now it's going to be all over the place. All right. So back to what's going on here. We bring back all this gold. We are the largest importer of gold in the world since November. We've been a net exporter forever. All this gold's coming in. No one's asking who the hell's doing it. Who's buying billions and billions and billions and billions worth of gold and silver? Who? No one's talking about it. I really do believe that the Exchange Stabilization Fund is involved in this and taking possession of it on behalf of the Treasury Department, not having to get congressional approval because it's for national security. But none of that even really is relevant. So if Judy is right and they peg it to the back end of the Treasury, first and foremost, that would allow you, because there's no upfront borrowing costs. All of the bonds, with the exception of the 50, would have zero interest, maybe the 30. They would be redeemable in gold. The more stupid you are with monetary and fiscal policy, the higher the price of gold goes. So the people will buy our bonds. They can trade off of them. Judy said, and there'll be stable coins issued off of those too. So in any case, they will, in theory, buy the bonds, which are redeemable in gold, which are very liquid throughout the system, and then they will be able to stand for redemption of gold in the end. But that allows you to bring back manufacturing at zero upfront borrowing costs. But what about the Triffin's dilemma? What about the strong dollar? I got an idea. Let's call something the Genius Act. And Trump's former crypto czar, Bo Hines, I think his last name is Hines. If it's not, forgive me, but I think it is now the president of USA Tether. What is USA Tether? USA Tether is the stable coin that will back every dollar issuance, period, moving forward at some point. Those USA Tether tokens, which will settle like Venmo and Zelle, all right? Think of it this way. You go to buy a new Ford F-150, you have to leave the dealership because they're not going to take a personal check from you and go wire the money to them. Now you'll bang, I just did it right off my phone. It's the blockchain form of dollar trading where everything will be backed by the stable coin USA Tether, which by law has to be backed by what? U.S. Treasuries, short term. This creates synthetic demand for the front end of the curve. As crazy as it is, stablecoin backing debt, not real stable. But every time you buy anything, whether it's a pack of cigarettes at a grocery store or a new suit at Nordstrom's or a new car, whatever it is you're buying, it will be moving via the stablecoin network. It's not implemented full yet, but it's coming. I mean, the law was passed. So everything we will see, you'll look at your bank account, you'll see dollars, but when you move it, it goes through the USA Tether network and settles instantly, which are all backed by short-term treasuries. Now, here's the kicker. They get to keep the spread between the issuance of treasuries and the stablecoin. You as a stablecoin mover, you're not getting the interest on that, on what's standing behind it. Short-term treasuries, they are. But with those, the profits, they're required to buy more short-term treasuries to push rates down, and gold and Bitcoin. They already own over 8 billion in gold held in Swiss vaults. They were just at the Beaver Creek Summit, which is with all the miners, right? They are interested in buying gold and more short-term treasuries and Bitcoin with all of the proceeds that everything is moving on all throughout the world will be backed by this stable coin, pushes rates down synthetically, and with the profit, they buy gold, which pushes gold up, which does what to the dollar? Deflates the dollar, depresses the dollar, right? Pushing the dollar down. Exactly what you're talking about. Same thing with Bitcoin. How do you pay off your debt? Let Bitcoin go to the moon because they continue. Look at how much gold Tether just bought the other day. Billions worth. Billions. They pushed Bitcoin up, and I'm not even a Bitcoin guy, but they're going to try and pay off the debt with it. The Russian finance minister is right. They'll let Bitcoin go up and they'll start to pay off the national debt. But by letting gold go higher and higher and higher and higher and having a mechanism that continues to buy it, plus all the gold coming in, billions and billions and billions, makes the gold stash go higher, sure, but then it also devalues the dollar. Now let's put it all together. How do you bring back manufacturing? I know you peg gold to the back end of the bond market like Judy Shelton is going to happen next July 4th. You bring it back at zero upfront borrowing costs. How do you sell your product to the world? You give up on the reserve standard and you massively devalue the dollar by letting gold and Bitcoin go to the moon. And that's exactly how you do it. Now, in essence, Trump gets up on stage and says, we screwed up a good thing. We used to be the world reserve currency that kept the prices of things we buy cheap, that kept our asset prices high and interest rates low. However, things have to change or our children have no future. Now, the only side effect I could see of all of this is universal basic income for a couple of years, because if you do not own assets in this environment where they have every intention of destroying the value of the dollar to reshore manufacturing, and someday, he would say, we have a future. We can grow ourselves out of this problem. We can be the engine of growth again, of manufacturing, of ingenuity. Because if you're not working in Wall Street or in Hollywood making movies or in California with IT, where are you? What is the future of your industry? We must bring back manufacturing. There's nobility and honesty in that. But the only way to do it is to give up on being the reserve standard. Let every other country trade their own currencies and let gold be the arbiter of value. Honest to God, in my heart, I believe that is what is happening right now. So this volatility we saw in gold, which is right back to where it was, means nothing. And yes, you should cost average, but I do believe when guys like Jeffries or companies like Jeffries says 6,600, when Gundlach says the Bond King says 25% gold's not too much, when Michael Hartnett says 20% of your assets in gold, when all these and Morgan Stanley, what do they really believe? What do they really think if that's what they're telling the public? So, yeah, this is the debasement trade. And the theory is you stay in dollars, you're destined to go broke.
Yeah. And I'm glad you brought it back to like the common person and how they're impacted, because I imagine, you devalue the currency significantly. You could pay, higher wages, even though those wages won't necessarily preserve your purchasing power. And so you mentioned that, we may have some form of universal basic income. And so just want to get you to elaborate a little more on that.
Yeah. And I wonder if I wrote this down. I read something last night. I'm not in my studio today because I got some workers coming here. So I wrote down some notes, and I don't know if I remember reading this last night. I don't think I wrote it down, but basically what it said was that the rise in gold is massively outpacing people's increase in pay. And it's like doubled in the last 18 months. And it's like the most ever, where I think the average wage in the country was like $36. So it takes 120 hours or whatever to buy 1 ounce of gold. It's the largest discrepancy ever. Gold is outpacing income. But look, inflation is a lie, Darrell. I mean, it should be the CP lie from the BS, not the BLS, because that's exactly what it is. Not only do they exclude food, energy, and housing and taxes, which is the biggest cost to all of us who work, they continue to massage the numbers and change them. If coffee's too high, they'll replace it with tea. If steak is too high, they'll replace it with ground beef. They want us to believe that inflation is at about 3%. They have missed for I don't know how many straight months, 50, 60, 70 straight months or longer, they have missed that 2% target. And now they're going to push the short-term rates lower through this synthetic energy coming through the Stablecoin Act. And think of it this way. Think of the guys of Rick Rule's level or of Eric Sprott's level, the very wealthy, sophisticated guys. So forget about the fact that they wouldn't even touch these things. But think of the very wealthy people who have tons and tons of money, who have kept their money in short-term treasuries for a while now, because short-term treasuries for the last year or two have paid a nice return. But is it nice? Because the CP lie, if you ask John Williams to come on your channel, the gentleman who runs shadowstats.com, all he does is calculate unemployment and inflation the way they used to be calculated before the Reagan administration. And he would tell you right now inflation is 11%. The dollar is down 11% this year, by the way. He would say add an 8 to any inflation number you see, an 8%, and that's the true number. But the dollar's down 11%. So if you bought short-term treasuries at 4% on a 6-month treasury, you rolled it into twice, so into a year, you get 4% return on the treasury. The dollar's down 11%. And so you're negative 7%, right? So, but let's just take the CP lie for what it is and call it 3%. Okay, fine, it's 3%. And And Trump wants to, through the passage of the stablecoin, he wants to bring rates down much lower, let's say 2%, right? So who in their right mind at an institutional level is going to take, even taking their own lying statistics, a real negative return on whatever money that the bond market is dead? This will incentivize people to do anything but buy short-term treasuries. And so the point of it is that inflation, I believe, is going to go much, much, much higher. They have no choice through the debasement of the currency. That is a byproduct of all of this. And in terms of where that big money is going to go, they ain't going to go in treasuries. They're going to buy things like gold, which further devalues the dollar. They're going to buy assets. They will not keep their money in things like short-term treasuries when rates are falling and inflation is rising. They won't. And so I think it's even a bigger bullish case. But I do think this, that if you don't own assets, you're in trouble. And look at it, again, dollar's down 11%. Short-term treasuries, 3/4 through the year this year are up 3%. And gold's up 55, silver's up like 70, 65. So it's an accelerating trend. And look, you don't need to be wealthy to start to de-dollarize and or start to own assets, even if it meant buying an ounce or two of silver every time you get paid. Whatever it is, the best thing you can do, in my opinion, is to own assets and mitigate your exposure to money within the banking system, which is acting more like a melting ice cube than it is a store of value.
Yeah, for sure. So, Andy, just for the record, I don't think you're crazy. I don't think you're nuts. I think you do a lot of due diligence, and I'm actually learning a lot from you in this conversation. And so I'm curious about, inflation runs hot. What happens to the Fed mandate? Do you have an idea or speculation? Are they just going to do away with that mandate on 3% or 2% inflation, whatever the mandate is?
Yeah, well, the mandate would be full employment and stable prices. What they're really afraid of right now is the labor market getting worse and worse and worse. And that's why they're talking about lowering rates to stimulate the economy. It's funny, in that interview with Judy Shelton, I asked her, I said, Judy, I've always just wanted to know who the hell had the bright idea of maintaining a 2% target of inflation, because isn't stable pricing a much better path where like a negative rate of inflation would be a higher standard of living, right? And she said, that's an interesting question. She said this on my video. People can go back and watch it. She said it was actually brought up by Janet Yellen's husband, who was on the Fed at that point, evidently. And he said that, if we have stable prices, well, it will be very difficult for you to ever give your employees a raise. Because if you continue to give your employees raises and prices don't rise, you're going to end up losing money. Okay, fair point. So he says, this is what we should do. We'll strive for a 2% rate of inflation. People can give their employees a 1% raise. And even though they feel that they're getting ahead, they're actually falling behind. It's as diabolical and gross as it gets. Wow. But, look, I just happen to think that the Fed has really very little choice right now. I mean, if they try and lower rates to reignite the employment industry when, again, or the labor market, when, again, AI is killing it and we have no manufacturing, better bring it back, you reignite the inflation engine. And then what? And you haven't hit your target in 5-6 years straight. And now you want to lower rates and to reignite that inflation and let asset prices even go higher and food and energy, or you raise rates and then what happens to the whole system? We saw what happened at 5% rates. The whole system broke with Silicon and Signature. They're trapped. So that dual mandate, I don't know. I mean, I think they're damned if they do, they're damned if they don't.
Yeah, for sure. Okay, so earlier you mentioned something, and this has kind of been sticking in my head. You mentioned the buying of silver, and there's some huge buyers of silver and such. And so I wanted to dive a little bit more into that and just get your perspective on that. I mean, because you've been keeping your ear to the ground, doing a lot of research. What is happening with silver. I mean, obviously, many people know about the silver shortages and such. I think I saw something recently with India and their silver holdings or whatnot. And so I want to get your tap into your knowledge on that.
Yeah, you got China sold out of silver supposedly, and I had to put my glasses on because I don't know how to say this. It's um, Shirazu, Hunan province. So it accounts for 1/4 of China's silver production. It's known as the silver capital of China. They're basically all out of stock. India, as you mentioned, their largest precious metals refinery has ran out of silver stock for the first time in history. Again, this is massive demand for physical. You have at the same time London with the lowest amount of silver, the float that they've had in the history of the exchange, of 140-year-old exchange. They have less than 140 million ounces, yet they're trading 600 million ounces a day off that stash. What could possibly go wrong? There's between 1 and 2 billion ounces of contracts that could stand for delivery with only 140 million ounces available. At the same time, right now, you have the U.S. government who just reclassified silver a critical mineral. At the same time, you have 19% lease rates in London, the highest it's ever been to my knowledge. So people who need to borrow silver to get whole, to cover a short position, they're paying 19% lease rates. And then there was SLV. What did I see on SLV here, which is another very, very big thing? Hang on one second. I could have swore I saw that last night. I might not have, but I think backwardation. We're at $1.24 backwardation. It's been that way now for 19 straight days, meaning that the futures market right now is $1.24 behind the spot price, meaning that the traders don't want to roll forward their paper contracts. They don't trust the system right now. Give me the metal now. I don't care. When you go further out, you have the time value of money, the storage, the interest, everything, and it's supposed to be much higher. It's much lower. It's very rare in silver. It's very rare. And it signals that the traders want the metal now and they're willing to pay more for it today than out into the future, which is crazy. That's a very unusual, very, very bullish thing. I don't remember exactly what I read on SLV other than to say that there's virtually no shares available to borrow. And the borrowing cost of those shares has gone through the roof. So SLV is something that can be shorted, which is stupid as hell. And of course, it's run by BlackRock and JP Morgan. JP Morgan, who paid a $920 million fine to the Justice Department for spoofing the market, is still allowed to be the custodian of this largest silver trust. But the borrowing fee to borrow it, and there's a huge short position, is through the roof. You're screwed if you have to borrow it to cover. And there's virtually no shares available. So you put it all together. You got massive drawdowns in London. You have massive deliveries into New York. You have places like the London Metals Exchange with their lowest float ever. Silver becoming impossible to find in China and in India. You have China flying around the world as the second largest producer in the world of silver, buying up all the doré bars from the miners directly. Those are crudely refined bars that before they get sent to the refineries, and the concentrate, which is a sludge byproduct, shipping it back to China and refining it themselves. You have backwardation, which is something that is very unusual and has been through for 3 straight weeks now. You have lease rates going to the moon. You have SLV borrow rates going to the moon, and no shares available. I don't know, man. People say he's talking his book. I'm telling you, when the U.S. government reclassified silver as a critical mineral, they just put a floor under it and told you it's important. And all the central banks that are now buying it, Saudi Arabia just bought a huge stash. India has bought 6 or 7 or 800 million ounces over the last half decade. No one knows the exact amount, but massive amounts. They can't even find it. You have Russia adding it to their strategic stockpile. You have it disappearing. Ask your buddy Keith Newmeyer, who I know is a friend of the show. He'll tell you. He's told me personally a million times, and I hear him saying it publicly from time to time. The real mining ratio is 7-to-1 right now, not the 80-to-1 price ratio crap that we're looking at. And it was 16-to-1 for 5,000 years. In every single metric, silver is the buying opportunity of a generation, period. And I don't care what anyone says, I'm not talking my book. When you manipulate a market for as long as the West has based upon illusionary paper product, that works until people say, hey, you know what? Give me the real shit. Period.
Yeah,
I
yeah.
want it now. And I don't want your paper promises anymore. When that happens, not only does it blow up the silver and gold market, Darrell, but the banks that are behind this are the biggest commercial banks in the world. It has the power to disrupt the entire financial system, because if they don't trust them on a default or failure to deliver in metal, what does it mean about all the other derivatives and all of the other things they have their fingers in? These banks don't just play in metals and that's it. They play in everything financial. So when you're talking some of the biggest banks in the world, it is a existential threat to some of them. And maybe that's why we're seeing all the metal coming back to the United States. Could it be that the banks here in the United States are going to get net long and let the banks in Europe hold the bag? I mean, that's what Tom Luongo talks about. And then maybe they get long, give the metal to the Exchange Stabilization Fund, to the U.S. government who buys it from them, to restock our stockpiles, which we don't have any silver, but now it's a critical mineral, so we better have some. Could it be that's what it's about? Could it be all that gold coming back, that Judy's right, they're going to back the Treasury market? I mean, I don't know, but you put all these dots together and they sure become a compelling thought experiment. And this is what I mean. Am I stupid to say this, or is it just, it's too logical for it to not to have some form of validity? In my heart, I believe it does.
Mm-hmm. Yeah. I'm interested in is how do you think? Well, each investor has to decide, what's best for them, right? And so let's just use me as a test case for this question. So I've always looked at silver as like a speculation. I know there's, obviously the monetary side of it, then the industrial side. And I've seen it as a speculation where, okay, the silver price increases significantly, I'm going to start liquidating and taking profits. Whereas my gold, I'm planning on holding that for the rest of my life and giving it to my kids and such. And so with silver being reclassified as a critical mineral, government stockpiling it and such. And I'm kind of wondering if I need to have a different kind of perspective on the role that silver plays rather than trying to, cash out at some point.
Smart people, Darrell, are those that can reevaluate their own thesis, which you just exemplified. Maybe it's an asset that is disappearing in nature. It's like your skin epidermis. It's found in nature in a form called epithermal, real near the surface. Big deposits were found ages ago. We've been running a 1 to 200 million ounce shortfall for the last 5 years in a row. We're about 1 billion ounces short between supply and demand. And you said something at the beginning there, the industrial, the monetary. Think about it. What commodities have plurality in use? Monetary, industrial, military, all of the things that silver is needed for. AI for the batteries, AI for the computers, the batteries for cars, for whatever, solar panels and photovoltaic, and all of these things. There's massive amounts of silver used in all the high-tech military equipment, and its monetary rebirth, renaissance that we've seen. It's rare, it's depleting, and its uses are increasing. So I don't think you get rid of all of it, but one thing that you could do when you look at silver, and you mentioned keeping your gold, the ratio that we see right now, let's see, what is the ratio as we speak? It's roughly about 43:30. Let me do the math here. 43:30 divided by 50. It's about 82.5 to 1. It's averaged 16 to 1 for 5,000 years. It's 7 to 1 right now in reality. And for about 150 years since the Industrial Revolution, because silver's role as money and gold's role as money and silver's role in industrial uses. And then since the banks in the West, the 8 Western banks who for years have had the largest concentrated short position of any commodity ever traded on COMEX in silver. Now, why the hell would 8 banks hold the price of silver down like this? Because silver is far more important than we are all led to believe. It is critical that the U.S. government just admitted it, right? And so they haven't been holding it down to keep the price down. They've been holding it down to keep the price down so analysts and other countries and everyone else wouldn't notice it as being as critical as it is to make high-tech weapons, to build a digital world. And they've got caught. They've got caught by the nations of the BRICS who understand exactly what we're doing, and they are now coordinated, motivated, sophisticated, and wealthy as hell, and they're draining all the world's exchanges and going around the world and buying doré and concentrate before it's even called silver. Silver is more important than we are led to believe. So I wouldn't sell all my silver, and I don't look at it as a speculation. It's wealth. It is a speculative. It's speculative in comparison to gold, but it is wealth that has outlived everything from 2 world wars, a German hyperinflation, to the Great Depression, to every pandemic, and it has never been more important than it is right now. So I would keep some for your kids, keep some because God only knows where it goes. And if I'm going to do anything with it, the first thing I would think of doing is that if we realize that the average man's price, even the man's price for the last 150 years has averaged about 45 to 1, right? Even though it was 16 to 1 for all of those years, but now it's 7 to 1 because the low-lying fruit, remember, it's found in the surface, it's gone. Of 100 and, or what was it, of 800 million ounces that were mined last year, under 200 million came from mining companies, silver mining companies. The rest of it was found by other companies mining other products, gold, copper, tin, whatever. Oh, here's some silver. It's disappearing. The price potential, we don't know what the real price potential is because of the massive naked shorting, which is now breaking with only 140 million ounces in London. It's breaking. And so if you did anything, in 2010 was the first podcast I did with Bix Weir. And we talked about, I said, Bix, it's 85 to 1. It's the second time in human history it's been this high, ever. And at least to my knowledge. And I said, let's tell everyone to sell their gold. We'll sell it to the market. We'll switch it to silver. And they did. Almost everyone I talked to did. It was one of the best calls I've ever made publicly. And within 7 months, mid-2011, you had $50 silver and 1915 gold. That's 37 to 1. That's just below its 200-year average, 150-year average. Man's average about 45 to 1. So anyone that 7 months earlier in 2010 would have traded 1 ounce of gold in theory for 85 ounces of silver. Forget, it didn't matter what coin and what type, but roughly 85 to 1 would have only needed 37 ounces of silver to go back into gold 7 months later, doubling plus what you started with. So if I were going to do anything with my silver other than hold it for my kids, which who knows how important it is when your kids are your age, I would think of trading it to gold, which I believe if a genie came out of the bottle and said, you got one wish financial asset, what is it? It would be gold. Gold's going to go higher than anyone ever thinks possible. Jim Sinclair, God rest his soul, always said this. It'll go to a level no one can imagine, and it will never come back down because it will be pegged to the monetary system. Judy Shelton is telling you that. And the BRICS are telling you that. They're going to use gold to back their settlement system. It's not going to be a common currency, at least not for the foreseeable future, but it will back their settlement system. And the expansion of the Shanghai Metals Exchange and the convertibility of the digital yuan into gold right now, without going into dollars, is telling you this. All right. So if I get 2 wishes, I'm loading up on silver right now at 82 to 1. And if all that happens is it gets to its 200-year price average of 42 to 1, it's a double. Now you switch it into gold. That's 6 times higher than it's coming out of the ground at, by the way, at 42 to 1. If it got anywhere near its geological average, it's roughly 10, almost 11 times undervalued geologically. Does that mean something? I think at some point it has to mean something. I mean, if gold is coming out of the ground right now at a 7 to 1, or silver is at a 7 to 1 clip to gold, but it's priced at 82 to 1. Doesn't that have to at least get somewhere closer to that number, to that geologic real number? Yeah, I think what it is, it's the opportunity of a generation, Darrell, because when someone says to you, I can show you how you can double your money, usually you should run because it's BS. It's the risk outweighs the reward. But if I say to you, buy silver, what you want to buy anyway, and And instead of buying gold, or take an ounce of gold and trade it to silver, and if all that happens is you reach the average of the last 100+ years, you switch it, you double. Just the average. Now, maybe it doesn't happen. Maybe it goes well past the average. But I will tell you that the law of averages are there for a reason. On my wall right there, I'm a baseball card junkie. Those are all the old baseball cards from, way back when, in the 50s, even in the Ty Cobbs and Babe Ruths. I've been doing it since I was a kid, and I became a power seller on eBay, and I get more pleasure out of that than anything in the world. But there's one baseball player in the modern industry, modern baseball, modern history, that hit 400. One, Ted Williams, on the last day of the season, he hit 400. And that's the law of averages. What I mean by that is that one player for all these years, bat 400, if you're 300, you're a Hall of Famer, right? So if your favorite baseball player, Aaron Judge, starts out the season batting 600 in the month of April, you go to Vegas and you lay down everything you've ever earned and bet that he's closer to 300 than he is to 600 at the end of the year, and you'll win almost every single time. There's been one out of thousands and thousands and thousands and thousands. That's the law of averages. And the farther away you get from established averages, the greater the magnetism that pulls you back. So my simple point to all of this is that if we are right now at 82 to 1, and it's coming out of the ground at 7 to 1, and it's averaged 16 to 1 for 5,000 years, we are in rarefied air, even though it stayed up here for the last couple of years, much longer than any of us who have been talking about this would have ever anticipated. And that's the old statement, the market can stay irrational longer than you can stay solvent. But over time, Mother Nature wins. And you cannot continue to consume silver in all of these uses, plurality of uses, in accelerating uses. Now it's critical, and have it priced at such a disparity to gold without the law of averages yanking you back to the center, to the mean. And that's the law of averages. So yeah, there are very few things that I think offer the potential that silver does. Very, very, very few. Okay. And the low downside risk. We call that asymmetrical. High upside, low downside.
Okay, so silver is still a huge buying opportunity, especially based on the ratio, gold to silver ratio.
Yeah, and I don't, look, you could get wealthy buying silver. Why not? But I don't tell people to buy gold or silver to get wealthy. Tell them to buy because it is wealth. And the most well-funded, and even far more important than that, Darrell, the most well-informed people on the planet are buying it. The central banks, the commercial banks, the sovereign wealth funds. Look, you're in this industry now for a while, and you know the guys that are super smart, right? The Rick Rules, the Bill Bonners, the Eric Sprotts, the James Rickards, all of these people, you know how important information is, right? And information is more important than the money behind it because it tells you where everything is going. And the players that are buying all this metal in billions and billions and billions and billions, they are using the stupidity of the Western price suppression to run cover for their acquisition. They are misdirecting. It's the book, The Art of War, where the whole premise is how to beat your opponent without throwing a punch. But you know what? It's taught in almost every major business school in America on corporate hierarchy. It's taught in law schools on formulating arguments. It's mandatory reading at West Point, at CIA. Every Japanese businessman reads it. It's real. And misdirection in every game you've ever played, the no-look pass in basketball, the misdirection in football, the squeeze bunt in baseball, checkers, chess, I don't care what you're playing, misdirection and throwing the opponent off the trail is the name of the game. That's what they're doing against us. That's what everyone should be focusing on. The big money around the world has been doing it forever to support the Western strength, the military-industrial complex, and the strength of the bond market, and the strength of the dollar. They got caught. They got caught by the rest of the world who's sophisticated, motivated, coordinated, and wealthy, and they're using it against us. This is why the exchanges are being bled dry. This is why someone got in Trump's ear and says, dude, if we don't do this, we're dead. And that's why all this metal coming back is more than tariffs. It's more than arbitrage. It is reshoring. It is a new monetary system. And when we pass the Stablecoin Act, bang, we are in a new monetary system, one that is going to be about assets being more valuable than the currencies that purchase them right now. And that is the race that we are seeing going on around the globe.
Yeah. Yeah, that's very important to note. And so appreciate you for sharing all of that with us, Andy. I look forward to having you back to giving us your expertise on this. I mean, you're doing a lot of due diligence and research, and so I mean, even just
That
taking
I
note
am,
of
man.
all the notes you took last night, and so, and so yeah, you're always keeping your eye on the ball. So where can people connect with you? Where can people access some of your services and such? Plug the people.
Well, first of all, I'm going to plug your show in Vancouver. There's only two shows that I go to each year. I go to Rick Rules here in Boca, my backyard, basically, and I go to Jay Martin's Vancouver Resource Investment Conference, where I know I will see you. And they're the only two I go to, and for the most part, and I wouldn't miss it. My YouTube channel, which is myself and Michelle McCory, is Miles Franklin Media on YouTube. People can find us at milesfranklin.com. Our prices will be as good or better than anyone in the country. But you have to send us an email at info at milesfranklin.com and request it. Or any questions you've heard here, we'll answer it. That we do post prices for a little bit on our website, but anything above 10 grand, you'll want to reach out to us. We won't be undersold. We change those prices a couple times a week. You find it better, let us know. We'll do our best to match it or beat it, always. We've been doing this now for 36 years without a customer complaint. And I guess the one thing that differentiates my company from others is we've never had a complaint in 36 years, but I left my home office in Minneapolis. Even though I moved to where we've had a satellite office in Boca for 20 years, I moved here 5 years ago from Minnesota, but I left corporate there. This is the only state in America that regulates a federally non-regulated industry. There's a lot of less than authentic and honest dealers out there. There's a lot of good ones, right? JM, Mesti, Money Metals, AppMex, they're all great companies. And I'm not forgetting some and trying to exclude them. There are a lot of good ones, and Miles Franklin too. But there are a lot of bad ones, and I'm not going to mention their names, but there's a lot of stuff in this industry that is deplorable. And guys like Kyle Seraphin do a good job talking about it, former FBI whistleblower. But anyways, I left it there because it's the only state that regulates what is a federally non-regulated industry. You can trust us. We've never had a complaint. We're licensed, we're bonded, we're background checked. We'll do the best we can to beat or match or beat any price in America. Info at Miles Franklin. If you just want the price sheet, that's it. Great. No one will contact you. If you want to be contacted, put your number down and we will get back to you. But please let us know you saw us on this show. It's important for us to keep track where people are coming from. And if anyone has any questions for me, say you got to talk to me and put that question down. It'll get passed to me.
Yeah, that's good. That's good. Well, you all got the information. Be sure to subscribe. We'd love to have your support for the channel as we continue putting out content and growing. So thank you, Andy, for coming on the show, and look forward to having you back.
Darrell, it's always a pleasure, my man. I look forward to seeing you in January and look forward to picking up before that, if need be, where we left off. But to you and yours, all the best.
Sounds good. Same to you.